up, guys? It's me, Dawit Salamun. I'm pretty much just yo, guys. It's me, Dawit. I'm back with another one. As you guys know, I trade forex and some crypto, but mainly forex and indices. Today, I'm just gonna go over how I made 2.5 R in the market today, and I'm gonna teach you guys how you could have done that for yourselves, ultimately making a very nice trade recap for you guys. So today we took a trade on GJ, as you can probably tell, and also my face is like at a new spot, so it's probably a little different format, but still all the same. As you guys can clearly tell, daily structure on GJ is currently bullish, right? We are trending upwards and upwards, so odds are we'll likely head to this high. Obviously, we won't just automatically target that. We'll wait for price to develop towards there. On the 4-hour, we were also bullish coming into New York session open. Correct, right? Bullish structure, right? Moving on, let's scale down to the hourly. On the hourly, we were also bullish. Let me move myself a little. This is New York Stock Exchange open. We made this fair value gap internally, and we actually take a nice chunk of that fair value gap, well over 50% of it, right? So what can we look for at this point? We have the daily that's bullish, the 4-hour that's bullish, the 1-hour that's bullish. So now we just want to find lower time frame executions that allow for us to take this trade, right? 15-minute was obviously bearish, right? Because we are looking at an hourly retracement, although we never broke structure. So what does that mean? We likely need a 5-minute break of structure to the upside to invalidate the 15-minute break of structures to the downside. Make sense? So what do we mark out? We mark out 1, the 15-minute order block that was last made. Because here, this is London session, and London session actually creates an internal break of structure here on the 15-minute. As you can tell, this high right here is higher than the previous low made by this previous bearish candle. So what can we tell? This was the order block that caused that move. However, it's already been mitigated, but we nevertheless mark it out. Why? Scale down to the 5-minute to get a better grasp of what's actually happening, right? So we could actually clear this order block out. I just marked it out as an extra, but because it was just mitigating this, right? And then we broke 5-minute structure here, and now we have this new order block, right? I mean, I just marked this out. Mind you, the order block is the entirety of the move up. Cool. So within this order block here, we get a minor reaction off this 5-minute break to the upside. Considering current action, 5-minute, break of structure, mitigate order block, continue. Break of structure, mitigate order block, continue. We'd expect the same thing here. But what happens at New York Open? We actually get something different. We actually see a 5-minute break of structure. We make a fair value gap. Do we end up mitigating it all the way here? No. But moving on. And then this is where I'm like, okay, my 5 minutes bullish, hourly's bullish, 4 hours bullish, daily's bullish. My 15 minutes saying bearish. So I want to make sure that I'm not getting caught up in a 15-minute retracement. So I'd like to see invalidations of what previous made PDRAs, like what this order block. So what can we do as traders? Scale down to the 1 minute from here and say, okay, what's really going on here, right? We get this break of structure here on the 5-minute. We make this fair value gap, and the likely reason why it wasn't mitigated is because most of the fair value gaps within are actually very, very small. In reality, it was just a swift move, but every single move was made up of a minor retracement expansion, It wasn't a clean fair value gap like potentially the one that was made here. That was likely mitigated on this candle here. It's just that it was a broker to broker difference, right? So what can we say? We break structure. We come into the order block right here, right, which caused this move. But mind you, before this was a 5-minute fake break of structure, as I like to call them. That's a term that I like to use because if I break structure to the upside and I end up going to the downside, that means that break of structure was just a fake out. It's not a valid break of structure. Got it? So what does that mean? We break structure, and where was the order block that caused that move? The previous move up before the expansion downwards, right? So what happens? Price gets into it, gives us some minor reactions, but nothing happens. In fact, we break a structure, make another fair value gap. This is where I'm like, okay, interesting. But what can we also notice here? I had this fair value gap, right? And I'm like, okay, it's not fully invalidated yet. Let's wait for more confluences to say that this thing is an invalid trade, correct? So what does that mean? You want to look for price to actually break this entire area, which it did. And upon that break, what else do we see? This is where we start to look for executions, because there's pretty much nothing from this previous leg on up that caused a 5-minute flip down that's left to be mitigated. There's nothing. In other words, we're pretty much headed higher, right? So we want to mitigate these bullish PD arrays that were made. And where was my last fair value gap? Right here. This is where I'm saying, okay, I'm almost about to take the trade. But what happens here? We are actually bearish on the 1 minute, and this could allow for this to be a liquidity sweep for us to mitigate this order block and continue down. So what am I still thinking? Okay, let's wait, because as you can tell, all of these candles aren't really showing me much sign of bullishness. This one does. But as what I believe Wakar said this. He said, restricted traded is a profitable trader, and that's probably one of the truest things. As long as you don't feel like all of your confluences are in line, you should not take a trade. So what do we see here? We break structure finally, and we make an imbalance. We fill the imbalance and react off of it. This is where I'm like, okay, I'm pretty much good to go. I execute off here, leave my stops under the last fill of the imbalance, because guess what? At this point, if price wants to come down, it's going all the way back down here. So it almost makes no sense for us to have our stops all the way down here. None. We're looking for negative RR. This was the last point that price mitigated that it should not come to, considering its bullish reaction off of it. Now we have our take profits that we set. In fact, this trader actually ran a solid 1 to 6. These were my take profits here. I had the previous Asian high right here. Then I had the high that was made during London. And then I also had this fair value gap that I took 50% profit off, just in case we'd actually get that minor retracement, right? So that was well played from my part. The only thing that I probably could have paid better was, instead of actually targeting this mitigated order block, because odds are whatever liquidity was here was actually liquidity induced, and potentially may have been a sweep of this and may have been a protected high. Might have just took this at the top of this order block, right? But nevertheless, it's still a great trade in my opinion. We ran actually a solid 1 to nearly 7, but as far as taking profit goes, I took it 1 at this fair value gap line up here. This is where you had this is like a triple fair value gap, which is a very good point to just take profit off, because odds are price will tend to react off of it, because there's lots of inefficiency within this zone. So just take profit off here. The nearest high that could have likely caused a mitigation of that inefficiency for a move on down, just in case that were to occur. And yeah, I mean, price did play out, as you guys can tell. It just went even higher, taking out that high that was made during London. So great trade overall. We took a 1 to 3.8 here, but as far as securing profits goes, we secured about 2.5% today. Great trade, and this was also given to the Discord as usual. So the Discord always gets the trades, guys. This is a very free Discord. This is just for you guys to come and learn, for me to help as much as I possibly can, considering all the things that I actually had to go through to learn all of them. So I just want to be able to offer you guys the maximum amount of free help that I can. I'll probably do live trades maybe next week, so you should join for that, so that you guys can actually learn exactly what goes on and ask questions while I'm looking for the trades, and we can actually interact, because there aren't that many people, as you can tell. Only 15 people. Some of these people I actually even get on calls with. So join, have the best at it, and yeah, like, follow, subscribe, and see you in the next one. Peace.